Now let's look at options and riders used in life insurance. We'll start with the basic provisions found in most life insurance policies. Then we'll explore ownership of a policy and the difference between first and third party, which speaks to who controls the policy. We'll examine the rights of the owner and show what the policy owner can do with the policy during the coverage period. The ability of the owner to change things is considerable. All these provisions will be defined for you, and you'll learn how to apply them in a given situation. If this, then what type of questions are asked on the licensing exam. Fraud and misrepresentations will then be presented. This will include their effect on issuance of a policy and the later potential for cancellation of a contract or a company declining to pay a death benefit. How policies may be modified and have their contract language changed, and how the policy will require premiums to be paid are also taught in this lesson. You'll then learn about certain legal provisions, such as assigning ownership of the policy to another person, how the applicant and insured are protected with a money-back guarantee if they decide they don't want the policy after it's issued, and the legal limitation of the carrier in canceling a policy due to inaccurate application information. The question of what occurs if a permanent life insurance policy lapses because a premium hasn't been paid will be asked and answered. Does it mean the owner forfeits the cash value? There are protections in place for this specific situation, and the policy owner will not lose the cash that's accumulated to that point. And we'll see what has to occur for the policy owner to bring the policy back into force. Permanent policies have what are called reinstatement provisions that may allow this, and we'll make sure to explain this. Other what-ifs that may occur are examined, such as instances where an insured age or gender is misstated on the application. The insurer cannot cancel the policy due to those misstatements, but there are other actions that can be taken. Like all insurance, life insurance policies can have exclusions. We're going to look at 4 different kinds of losses that are either excluded or have limitations in the policy. Those of suicide, war, drugs and alcohol, and aviation exclusions. Beneficiaries will be discussed at length, including different ways they may be designated within the contract and the limitations placed on the policy owner in certain beneficiary situations. You'll learn that there is a succession of beneficiaries when the insured dies. It is important that you have this down for the test. Trusts can also be named as beneficiaries, and we'll take a look at those too. Then, we'll look at how the IRS views money in a life insurance policy cash value account, if those funds are ever taxable, and potential tax consequences for accessing the cash value. Settlement options are the different ways life insurance death benefits can be paid, and they'll be studied in depth. Depending on the payout option selected, there are differences as to how much and how long a beneficiary could receive funds. Another topic of discussion will be the various ways to access the cash value of permanent policies and the effect of withdrawing or borrowing from that cash value. Finally, we'll consider the different riders that may be added to life insurance policies. Riders must be attached to a policy to be effective under the entire contract provision. You'll see that most riders in life insurance add or modify the coverage. Some of them can be really advantageous for a policyholder, such as the waiver premium rider, which pays a premium on the contract if the premium payer becomes disabled. Most riders are inexpensive, but some can add significantly to the premium requirement.